Hi everyone, I'm Ricardo Gonsalves. Well, ANZ has posted a record full year profit of $5.7 billion. That's an increase of around 6%. So how did it get there and where to now for the company? For more details, I am joined by City Index analyst Peter Esho. He joins me now with more details. Peter, appreciate your time. How would you describe the result first of all?
It's a very strong result. It's a result that's met and slightly exceeded market expectations. No real nasty surprises. The share price has been very strong. It has rallied over the past 3 months, and I think that rally was justified by today's result. So very clean and really in line with expectations.
Run us through what you think are the highlights.
The highlight is really a vindication for Mike Smith and the whole strategy of going into Asia. What ANZ has shown in these set of numbers is that their Asian strategy is now starting to mature, it's starting to deliver results. 20% of this business now comes from outside of Australia, from the Asia Pacific region, and that's very, very important because that was part of a well-designed strategy. It also shows that Australia has withstood a lot of the problems in 2012, and our banking system is very, very strong.
Any concerns for the group?
If there are any concerns, it's perhaps a little bit of a slowdown in the rate of earnings growth in the second half. It's nothing really problematic, but I think it just goes to show that these banks are really struggling to grow their earnings above expectations. And in terms of provisioning, the amount of money that ANZ has put aside for bad loans, it was perhaps a little bit higher than what we were expecting. And I think that is an anticipation of a few large problem loans to potentially hit their books next year. So I think those two issues were perhaps the negatives that emerged from these sets of numbers.
ANZ has a policy of announcing its interest rates decision on the second Friday of every month, thus making it the last of the big four to make such a decision. How has that affected its bottom line?
Yeah, absolutely. Look, pricing is very, very important for any business. And when you're selling a commoditized product, particularly in the banking space, you really want to be in control of your pricing. And what ANZ has done very cleverly over the past year is that they've allowed their competitors to move before they really need to have to, and they've made that in a timely way. So they have an ability to go out into the market and price their products based on how much demand they want. It's delivered a result whereby their margins have fallen, but they've contained that margin fall. They haven't fallen more than expectations. It's been a very tough year, and I think it's been a very wise move for shareholders.
Now, ANZ is well ahead in terms of its wholesale funding arrangements, and customer deposits comprise around 61% of total funding. So what does it mean for the business?
Yeah, look, funding is very, very important. Funding is about pricing, and it's also about being in control of your own inventory. And I think what ANZ have done very cleverly as they've pushed into Asia, they've really maximised the ability to source cheap deposits. Interest rates in Asia are quite lower than in Australia, and they've exploited that. Rather than going into the market and borrowing from institutions in the wholesale market, they've sought to borrow from these deposit holders, and that's why we see ANZ reporting around 60%. Now, it's come at a little bit of a higher cost, and I think they've been passing that cost through. I think what we'll see in 2013 is them increasing, towards wholesale markets. Wholesale markets have been improving. What's happening in the US is a lot of money is now flowing towards these institutions, and I think that will actually help ANZ pass on better rates to their customers and hopefully drive down, the average rate that Australians are paying on their mortgages.
And how would you rank ANZ compared to its competitors?
It is a very unique investment. Unlike its peers, it has a very successful Asian growth strategy, and I think that appeals to a lot of investors outside of Australia in this region. National Australia Bank, for example, is an international organisation, but it's in the UK. It has some problems there, and even last week it had to announce an increase in provisioning. Commonwealth Bank probably rates a little bit higher in Australia, but it doesn't have that offshore exposure and perhaps doesn't appeal as much. And Westpac is stuck in the middle, looking to diversify outside. So, ANZ is very, very attractive. They just need to keep delivering on Asia in order to please the market.
Okay, Peter Esho from City Index, thanks for your time.